we think gold's run hasn't quite finished yet, and it comes back to interest rates. I mean, one of the best explanations of why gold has surged the way it has through this year have been bond yields. So net of inflation, or what we call real bond yields, those have been sort of on a one-way tear, and that sort of lined up very nicely with the move in gold. Now, as bond yields sort of corrected higher, that sort of again has explained gold's pullback very well. We had quite a bit of one-sided positioning in gold, and I think that's actually unwound quite quickly. A lot of our proprietary indicators are telling us exactly that. But at the end of the day, if we're right about central banks trying to do their best to keep bond yields capped, and economic recovery sort of stays the course and keeps sort of inflation sort of continue to creep even a little bit higher, that's ultimately a great environment for gold.
And Manpreet, something we're hearing from a lot of market participants and overseers of the markets, in fact, as well, we heard Jerome Powell calling for it indeed, is the negotiation for the next round of coronavirus stimulus aid in the US. Say that we get an agreement by early September, say it's around close to the Republican proposal of $1 trillion. What impact do you expect to see on the markets, and how are you positioned for that?
Well, I think the agreement of stimulus to us would be one still key assumption behind this economic recovery continuing. If you look at a lot of high-frequency indicators, I mean, yes, we've had a nice rebound from the bottom, but it's hard to see sort of, that self-sustaining trend come through to the point where the economy might be ready to, live off the stimulus. So I think getting stimulus, at least before we get sort of a sustained, COVID vaccine, sort of getting into the post-COVID world, is still very important. But I think to your point, if that stimulus is still sort of not being agreed to, that's again short term. And looking at the next month, one of the potential risks that markets do worry that the stimulus may not be as easily forthcoming or the size that's being expected. That could create a bit of volatility. But going back through history, it's not unusual that sometimes it takes a bit of a market wobble to force policymakers and sort of push them across the line. But we still think that's necessary until we know that the economy can fully reopen.